Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
It is a joy to have back with us Kyle Fuller from Factum Financial. Hi, Kyle.
How's it going? Glad to be back.
So we had you on the podcast a little while back talking about infinite banking.
Episode 90, right?
Episode 90. Yep. So yeah, if you would, though, I know that there's people that didn't listen to that, as we dive into how to use infinite banking as a tool for investing in residential real estate. What is the Cliff Notes version of infinite banking?
So infinite banking is a major paradigm shift for most people. And so it is a completely opposite conversation from investing, which is where we're going to go today. Yeah. So the easiest way I could describe this is banking is about controlling that flow of money as it relates to you. So bankers are master of money coming in, they control it, and then they will lend it out to a borrower, consumer, investor, but they control that flow of money. Investing is a very different conversation. It's separating that control of money to hopefully get a return back in the future. So when you pair those two concepts together, you get something very unique in the money game. Now, infinite banking is a process. It is the process of becoming your own banker. The reason that we are so adamant on educating on that is banks are some of the wealthiest companies in the world. They're masters at the money game. And with all the money that they make, they choose to keep their savings with life insurance companies in very specially designed insurance policies, what we would call whole life insurance at the middle class level. Now, when you change your savings environment and then you understand the process of banking, you now have the right tool to make banking very efficient for you. When that function is owned, it complements everything else you're doing, which is why when we teach, this is always an addition to, never a subtraction conversation, which is why we love real estate investing. It's like, keep investing in real estate, but understand banking on the backside, which is going to complement everything you do. It'll add more control, more certainty, and ultimately more cash flow to your investing strategy. Like I said, it's a major paradigm shift. Mm-hmm. If they want to read the book, go by Becoming Your Own Banker by Nelson Nash. It's a quick 85-page read. You'll get the basics there, and then they can go onto our website or whatever and find our educational resources.
So a quick question there is, because this could be a deal breaker for me, is becoming a banker, do I have to wear a coat and a tie, or?
Yeah, so when you onboard and you're a client, we send you a package. We get all your sizes, and so yes, you do have to start dressing like a banker.
We're in Arizona, it's hot out there, man.
You can't wear sandals and shorts. It's you got to look the part.
All right, so I don't actually have to go be a banker. I get to be the banker for my family. I think that's the underlying tone. So
yeah, the nice thing is,
and if I showed up in a suit and tie, they'd think something was wrong.
Well, I do have one. It's for Marion and Marion.
And the premise behind that, Kenny, is I think a lot of people would look at a bank and say, I'd love to own one of those. Mm-hmm. But the problem is they don't have 20 years to wait and get a bank charter and have $30 million liquid to start that. So what you can do, and what Nelson Nash identified in that book, Becoming Your Own Banker, is you can just go start saving in the same environments banks save, and then you just move your money the same way they move theirs, and the same problem is solved.
Right.
Very easy. So you can tie into a system that already exists without any of the overhead.
I think the BFK is still available too, so I'll register that. No, I'm just teasing, but I think it is a big paradigm shift or mindset shift for people to think that way. Like, how do I be a bank? And I think that's what's so cool about the education that you provide through this is it really unlocks your vision of like, oh, it's not like I have to have millions of dollars. I just have to start building something, and it can be generational, which is why we're so excited about it, because our goal is to help people build wealth, and real estate is a vehicle to get them there, but there's tools to use to help build that vehicle, and this is one of them that we really like. And so, but I know today we wanted to dive in, a little more specific to the real estate class and using this system, this model to help build wealth through real estate, because we know most wealth. I mean, I'm talking Rockefellers and, the biggest names out there. Most of their portfolio has a high percentage of real estate in it. And it's usually one of the easiest ways to get in, because most people buy their primary residence. And that ends up being kind of a wealth building tool for them when used appropriately, not use your equity as an ATM either on consumer goods, using your equity maybe to leverage and buy another property, which we get into that. But let's talk about this tool and kind of how you've seen it work in the real estate space.
Yeah. So let's start with a problem, because if we don't know a problem that it's solving for us, then the solution never really manifests itself, right? So the problem that we solve with banking is that you finance everything in life. You're either going to pay up interest to borrow money from someone, or you're going to give up interest you could have earned by using your cash. When you change your savings environment and you start saving into a properly designed whole life insurance policy, you keep what's called the interest cost on your side. So every dollar that flows through my insurance policies, which is my preferred primary savings vehicle now, I earn interest on every day for the rest of my life. So one of the biggest problems that I hear from real estate investors is they've got liquid cash sitting in a bank account, right? And a lot of times they're antsy. I got to get this moving because it's not doing anything for me. Now, I'm very authentic when it comes to money. And if you go through my courses, you'll see this. But my cash accounts inside my policies grow $3,500 a month tax-free right now. Okay. Every year, that number increases. Now, I've been doing this for almost 9 years. So when you're just starting out, your system won't grow that fast, just like buying real estate, right? You got 10 properties versus one. So the fact that my cash accounts are increasing my cash flow every month allows me to be very patient while I wait for the right deals. And what I've seen from a lot of real estate investors is they need to keep their money moving, because if it's sitting in a checking account, they're losing value, right? The next big one is contracts. You know, when you go to purchase a home, is that process with the bank easy?
Not.
It's easier when you use the Klaus Team,
right? You've got good resources.
It's not
and
fun.
relationships.
It's so documented because of the crash of '08 that the pendulum swung the other way, and people get really frustrated because it's like, wait a minute, I got to every little thing anymore, which is good and bad, because at least we know your neighbors that are buying today are actually checked and there's income provided and actually can do it. But yeah, it's definitely not the simple process.
That you're signing, that you're saying that you signed another form.
Right. Hey everyone, this is Kenny Klaus with Klaus Team Real Estate Solutions. We know there's a lot of confusion in today's market, whether it's billboards, TV, radio, mail. Everyone's trying to get your attention. They offer one lane, where at the Klaus Team, we have over 20 different programs we can help you navigate through to find out what's best for you. And remember, we work for you, they work for themselves. We're here to represent you and make sure you have the best experience possible.
Visit us at klausteam.com/call-us-first.
So my experience, I know Steve Chater very well, and I came to some of his wealth building seminars around real estate many, many years ago. And as soon as I took him to lunch and he told me that the market was not crashing and it was actually going to keep going up, my wife and I went and bought a home immediately, right? And it was the most stressful experience for us, because that loan, we had an underwriter that could not comprehend how I owned my business, but I also worked in it as well. It was a nightmare for me because I wasn't W-2. We live a pretty stress-free life, but going through that process was so aggravating for us. It was the worst. And so some of these problems that we see, that complementing real estate investing with infinite banking solves a lot of what we call the unseen problems. So some of the problems that I hear from real estate investors is their cash accounts don't do anything for them, which is why they're constantly trying to move money quickly. You got these contracts with the banks that can be a complete nightmare, and they control everything with that equation. The timing of it, it might take 40 days to close on some of these deals, unless you got cash and you got programs like you guys have. And, ultimately it comes down to the control factor. You don't have a lot of control when you deal with the banks, because they keep all of that on their side. Now, what I've spent 9 years building is a private banking system. The nice thing about shifting my savings from a commercial bank to an insurance company is I own those contracts. So I've got substantial amounts of cash in these policies. So if I want to go get a loan, I make one phone call. I fill out one form. It requires 3 signatures, mine, my wife's, and a witness. And I have that money in my account in 2 to 3 days. From there, I can go do whatever I want with it. So if we're going to go buy real estate, which is what I did to make the down payment on our first home we purchased, right? I didn't use cash. I used a loan from an insurance policy. Now, I didn't have to tell the underwriter that, right? That's as good as cash to them. This comes down to the privacy portion of these policies. They're so private, no one knows you have these cash accounts because whole life insurance is not an investment. It's a life insurance policy, but if it's structured properly, you would say, oh, this is like a really aggressive guaranteed private savings account. So I told our underwriter and the loan officer, I've got a ton of cash in my whole life insurance, which they usually understand that part, right? I said, what's the down payment going to be? I'm going to move money from this policy to this account before closing, and that's what we're going to do. So as long as I prepped him, conversation was fine. Now, the timing of that was very quick, but now I'm in control of that amortization schedule with the insurance company. This, for a real estate investor, is huge. So I'm using OPM to buy real estate. I'm not using my money. I'm using the insurance company's money while my policy cash values continue to compound and grow. But I am in full control of that amortization. So essentially, I can take an interest-only option for 60 years if I wanted. Now, I'm a good banker and we coach people on this. You probably don't want to abuse that feature, which is why we're so heavy on education. It offers you so much control and flexibility that if you wanted, you could abuse that situation, right? You can't do that with a bank. If you try to tell the bank, I want an unstructured loan at 5% interest, I mean, they're going to look at you like you're crazy. They're not doing that. One, they're not doing that deal ever. And if they did, it'd be like 20% interest. But you can get these lines of credit from the insurance company with no questions asked because you own the contract. And you can only borrow against what you have in cash value. So the bigger your premiums and cash value become in your policy, the more you can borrow against it, right? So it might take someone several years to build up enough cash reserves like we're doing with you, Ty, to make a down payment or even pay off a property in full, but then you own the note and you control the amortization schedule. So when you couple that banking conversation, it gives you more certainty for your cash, more cash flow growth on it, more control. It simplifies the money game tremendously. Now, that doesn't happen in like 2 to 3 years. Now, real estate, we encourage a buy and hold strategy. We're looking at a 30-year time period. Pay off these notes over 30 years. That's a great retirement strategy. When you couple that with a more efficient savings environment, which is a 30-year plan with a whole life insurance policy, it will blow your mind when you have that cash flow from the real estate and the cash flow or the cash value increase from your policy. When those two are working together, it accelerates everything you're doing.
And we're hearing this right because we're going to annually keep putting into our bank, and then we may decide at some point to borrow against that. It still stays in earning interest, but we may decide to take a loan out against that asset to either as a down payment or if we have enough, even to pay cash. And then we're paying ourselves back with cash flow from that piece of real estate. Is that the way I'm understanding it?
Absolutely. So one of the reasons why it's so powerful to couple it with real estate investing is what you were saying earlier, Kenny, is when it's kind of like a money hack for the money game. You have a tenant paying down your mortgage while you're making money and reducing your taxes. That's a trifecta. That's amazing. Tremendous leverage, but you're also providing a service that is super important for someone. You're putting them in a home. See, I'm also very concerned with how I'm making my money, not just how much money I'm making. Now, when you couple the banking strategy with that, yes, you're going to create a policy loan that you control the amortization schedule. But if you have cash flow from your property, you can use that to start refilling or paying down that line of credit to the insurance company. And essentially what you're doing is creating a closed economy. You control the banking function. All the money that flows into that policy, you're constantly earning interest on in a completely controlled and certain environment that's guaranteed to go up every year. Now you've got this property that the tenant's paying down your mortgage, which is going to jack up your cash flow by the time that thing's paid off. Well, by the time that's paid off, your policy loan's paid off with the cash flow, and you've got a system that's way more substantial than what you would have had by just leveraging a traditional checking account.
And the death benefit of that policy, we could also go to pay off the traditional mortgage should you choose to take that out for the remaining of the balance of the purchase of that property. In theory, you could use it for that.
So say that again, the death benefit of the cash value.
Well, the cash value we were going to borrow against, let's say for a down payment. Let's say I needed, $50,000 to put down as an investor on a small rental property. And then I would pay myself back that $50,000 through cash flow from the tenant. I would then, in many cases, have a traditional mortgage for 80% of that purchase price for that property. If something were to happen while I own that property tenant in place, the cash or the death benefit of that policy could also go, if we choose, to pay that mortgage off, to have a free and clear asset.
Absolutely. So going back to the control and the certainty conversation. So let's say you're buying real estate and you had a policy that you're using as your primary savings vehicle. Well, it's life insurance. There is a death benefit attached to it. And depending on what your goals are would dictate how we're going to design it. So if you're buying it for real estate, we might want that death benefit a little bit higher, especially if you're thinking long term, because you're right. Let's say you'd acquired 2 or 3 properties and something happens to you, you pass away. Well, the death benefit could pay off all 3 of those properties and instantly create big cash flow for your significant other.
Right.
I mean, we're talking instant wealth. So my wife and I have this built into our trust plan. If something were to happen to me, any debts that we would have, if those properties or that stuff was paid off, it would increase her cash flow to a number that would never interrupt our lifestyle right now. Mm-hmm. That gives me so much peace of mind when I'm sleeping every night that things are getting better every day while we're alive because of the guaranteed nature of the policy. Something were to happen, worst case scenario, there's no interruption of lifestyle because that death benefit could pay off any debt, which is going to free up a ton of cash flow for her and the family.
So anybody who has a trust, and if you don't probably consider that now, this would be a beneficiary of that. In other words, the beneficiary would be the trust from the policy, which would then be used to pay off any debt we might have.
Absolutely.
Yeah.
The Klaus Team is different. With the Klaus Team, you have someone on your side. Where you live and make memories is important. We have more unique strategies than anyone else to help you accomplish what matters most to you. We can help you with traditional real estate as well as other options such as our lease purchase programs. We can help you buy first then sell, and we can bring you instant offers. We're here to help our neighbors achieve the American dream and help them build wealth through home ownership. For more info or to start your home search, visit us online at klausteam.com.
So thinking about this from mainstream, like it sounds too good to be true, right? I mean, on the surface, first time you hear it, you're like, well, why doesn't everybody do this? Well, the people we trust the most, I say trust the most, maybe that's the wrong term, but that has influenced us the most and our parents and our generations is banks. Well, this doesn't benefit banks. Financial planners, who we trust and a lot of times our families refer to, doesn't benefit them because we're pulling money away from that into these policies. And Uncle Sam doesn't benefit the IRS because the policy is growing tax-free. Because I try to think like, if it's so good and so solid, why aren't we hearing about it? Because the biggest institutions, it doesn't benefit any of them, realistically, in the way I'm seeing it. Because if the banks aren't getting my savings account and lending my money back out and making money on me, I'm not going to go in there and go, oh, hey, have you heard about this policy? IRS, certainly not, because they want tax revenue. And again, financial planners, no different than self-directed IRAs. It doesn't benefit them, so I hadn't heard it from my previous one until I went to a class and got educated on it. So I think when people wonder, why don't we hear more about this? To me, those 3, there may be more reasons, those are just 3 that come off the top of my head that most of us put some validity or trust in. Banks, financial planner, and not IRS from a trust in, but from a, like, they're the big dogs. Why wouldn't they share this if they truly wanted us to build wealth and generational wealth? Well, because they got to fund the mess that they got. So maybe there's other entities too that we would look at that say, why wouldn't they tell us about that? But those 3 seem to be the 3 big ones that come to mind.
How do most of your clients who use their infinite banking accounts to purchase real estate, how do they structure, or what's an example of a way you could structure it? I know Steve Chater told a story recently about he found a pretty good deal, an off-market wholesale deal, and he wanted to jump on that and do a deal with his son. So he accessed that. He was telling the group about using money out of his infinite banking policy in a time where he had to make a decision pretty quick, within a couple, 3 days, to jump on this opportunity. And he was able to do that, and now is doing a flip that's back on the market now with his son. And that's one example. How do a lot of your clients structure this when they want to buy real estate with their infinite banking policy?
So it's very simple, and it's only adding one step to what you're already doing. right? It's just instead of keeping the bulk of my savings at Chase Bank, I keep it in my banking system, which is where Chase Bank is saving their money, right? And so once the cash value is there and I have a deal, all I do is contact the insurance company and say, I need, depending on how much cash I have in my policies, 50,000, 100,000, I access that via a loan so I don't interrupt the growth of my money. I get that loan interest rate at a very favorable interest rate on terms that you will never believe are possible because you get to decide the amortization. That for a real estate investor or business, I cannot stress it enough. Until you're actually doing it, that's when you're going to realize like, this is so incredible, right? And so once it's there, it just goes to an account like I would have normally. And from there, you do what you normally do for business or your investment. So then you acquire the property, you set up whatever you need to, a note, whatever. And then all you do is figure out your payment plan back to your policy on your terms, depending on what the cash flow is. So for some people, they might purchase an asset that they have no desire to pay back a monthly payment to the insurance company for like 3 years because they're going to let that asset like appreciate. And then they're going to sell it in 3 years and then refill their policy at that time. So worst case scenario in that situation, you're going to make an interest only payment once a year, which is completely private by the way. It doesn't show up on any credit report. Another huge advantage in the money game. When I have policy loans out, no one knows that I have these other than myself and the insurance company. It does not inhibit my ability to borrow conventionally. So I can still go get money from a bank, but when I do, people know I have those lines of credit, right? Or they have that loan out. An insurance policy loan is incredibly private, which gives me some serious advantages, which is why I always leave cash reserves in my policies because worst case scenario, I can always go there to get myself out of a pinch or to capitalize on a deal. So maybe banks are freezing their lines of credit because things are a little bit uncertain. I have guaranteed lines of credit with the insurance company. Under no circumstances can they deny me access to that money because I'm first in line to use it. Make sense? Mm-hmm. So the only thing we're changing is the savings environment. Everything else you would still structure and do exactly like you're currently doing. We just added one piece to that equation.
Got it.
Yep. Makes sense.
So if people want to dive in a little bit more, how do they get a hold of you?
So they can go to our website or they can email me, Kyle@factumfinancial.com. We're on Facebook too. We're pretty easy to find. We're local here in Mesa. And all of our content is free. And so I recorded a video course that you've seen, Kenny. It's 40 videos because everyone asks the same questions, right? It's like, it's all paradigm shifts. I'm like, I got tired of teaching the same thing 100 times in a row. So I recorded content on it. And then people go through it and it answers about 90% of their questions, which is good because we want them to be educated. I'll never sell anyone anything. We'll give you as much education to where you see this and you say, all right, I have to have this now. That's someone that I want to be in business with, right? And so they can find us online, factumfinancial.com. They can send me an email, find us on Facebook. We're teaching live courses 3 times a month right now, 2 intro workshops and a deep dive topic. And so we're very, very educational. We got a lot of resources they could go through.
Yeah, well, and you can contact us too if you need to get connected with or find out when the next events are. But again, his website is packed with information. There's no shortage of that, and you can watch it on your terms in the comfort of your home or whatever to get the education, which is what I did. So awesome! Thanks, Kyle.
Thank you so much.
Thanks, man.
Thanks for spending time with us this week at State 48 Homeowner, the ins and outs of owning an Arizona home. You can connect with us for more information, submit topics you'd like us to further discuss. You can see relevant videos, give us feedback, answer your real estate questions, and more at state48homeowner.com.